Guys, let's see here. We are excited to have my buddy Joel Block, and when we were, putting the schedule together, he's the first guy that I reached out to have him speak on it, because I know that raising capital is such a big question. It can seem like that 600-pound gorilla for investors a lot of time trying to figure it out. And Joel is just he is the foremost expert in the real estate industry at Bullseye Capital. He has helped so many other investors put together their hedge funds, their PPMs, and get funding and get projects done in place. His I don't want to give how many years of experience because we don't want to date him, but this avid LA Dodger fan, go Giants, is ready for baseball season to kick it off like I am. But he's out there really helping investors out there. So we're honored to have the one, the only Joel Block from Bullseye Capital join us today. So what's up, Joel?
Hey, well, listen, man, it's always fun to be with you. You have a great following of people. And I'm just going to tell you that the world is different today than it was a year ago. The world is different. And, I work in the world of opportunity, and, you work in the world of opportunity. The difference is, though, that not everybody's gun is always loaded. And I'm going to tell you, if you show up to a gunfight with no bullets in your gun, stay home. And and that's, but that's the problem. That's what most people do is they walk around, looking for opportunities, but they're not ready to pull the trigger. And then they just end up embarrassing themselves and screwing it up for people that are really ready. Mm-hmm. And that's why, the flip business and all these other businesses are full of all these fake guys, because they're all pretending that they've got the resources, and the guys that really do, they're the players, and if you want to be a player, then you got to play. It's pretty simple. This is a pretty simple game to be in. You just got to show up with a bag of money and you're a player. So,
well, it's all about getting that bag of money, and that's one of the things that we're talking about. We just had a great marketing expert talk about how to kind of build the audience and start sharing that to get people to start paying attention to you. You've done some amazing projects and really showed people how to show up with that bag of money and what they need to be doing and talking.
Yeah, no, we probably have we probably build more syndications and funds than anybody else in the country, and certainly we build better ones. I mean, listen, I'm not an attorney, which I'll say that later on, and there are a lot of attorneys who tell you that they're the right guys to put your stuff together. You need attorneys to write your paperwork, but attorneys are not deal makers. Attorneys do not necessarily put the best deals together because they're not in the field every day talking to investors. So, I work with attorneys. We have teams of guys, so business people and attorneys. We work together to make sure that the best kinds of structures are being put in place, and that's how we do a really, really good job. So. I got a lot of really cool stuff to share, and I don't know how you want to do this. If you want me just to share the screen,
share your screen and dive into it, and then do you want to take questions as they go along, or wait till the very end, Joel?
Let me share some material,
okay.
And there'll be a couple stopping points. There'll be a stopping point kind of in the middle, and then a stopping point at the end. Then I'll probably wait. What did you say? 30, 40 minutes, 50 minutes?
You got an hour 15 to fill, so
I could do that like in my sleep.
Yeah, that's totally fine. That works perfectly.
We'll leave questions. So if people want to fire in questions, and and we have this enormous standard setting video library, and I know that it's awesome because all the other people who talk about similar topics, they all copycat our stuff. They all try, and they're I don't know if that happens to you too, but people are constantly copycatting the kinds of stuff we're doing, and we're always out in front, doing the stuff, and that's, but anyway, that being said, let me share the screen and let me take on, and if you need to pipe something in or if you have a question, feel free to interrupt me.
Will do.
I'm just going to keep going here for a while, and I'm not going to monitor the chat. So if there's stuff in chat, please, you do that part and I'll do this part and we'll make it happen. Okay.
We'll keep you doing what you're good at, and I'll handle the delegation of it.
You have to enable sharing in order for me to be able to share.
I've done that before. So I'm gonna have to log back out. And so I'm gonna make you the host, and then you should be able to share it from there. So let me just leave here. Leave meeting. I'm gonna assign.
Okay. All right, can you see my screen? Scott, can you guys see? Okay, so it looks like from the chat people can see, but I don't know, Scott, where you went, but here it is. So, all right, look, my name is Joel Block, and we're going to talk about how you're going to ditch your private money, your hard money lenders, so you can get money with better terms, better pricing, and more control. And that really, and at the end of the day, the control is the important part. And the word control means when you go and you ask somebody for some money and you say, hey, listen, I got a deal, you want to do some money? They go, well, we're gonna have to examine it, we're gonna have to underwrite it, do whatever. What that means is that somebody else beside you is determining the success of your future, the way you're gonna feed and take care of your family. Anybody who controls your money controls your business, they control your life. And you don't want anybody else ever to control your business, to control your life, to control anything. You want to be in control. So the whole syndication process is really about you being in control, and that's the most important thing that we can all hope for here together. So let's talk about this. Crisis is the mother of opportunity. I didn't make this up. This is just really, it's a real fact, and there probably has never been more opportunity than there is about to be right now. If it hasn't already hit your plate, it's about to hit your plate, and that's it. So the bottom line, though, is that opportunity only exists for people who are ready, and ready means that your cash is in place, ready to go. So when somebody calls you and says, look, I have a smoking hot deal, that's not the day that you start looking for money. Your money has to be in place and ready to go. And this is a different way of thinking than most people probably think now. They think, well, I'll get the deal, then the money will come. No, the money comes first, and then you go shopping. You don't go to the supermarket, load up your basket of groceries, and then run out and say, hey, listen, I got to go to the car and get my wallet. That's not how it works. The way you do it is you come into the store ready to go, and you need to go to the table ready to go. And when you do that, you're going to get a readiness premium. And a readiness premium means that you're going to pay less because you're ready. People who are not ready pay more. People who are ready pay less. That's just the way it works. So we're going to talk about the money business, which is the syndication business, syndications and funds. And we'll talk a little bit about what the difference even between those things are. But they're all the same. The bottom line is that investors put money in a pot, and you then take that pot of money and you go buy some things. And that is very attractive to you, because if you're trying to buy notes, or you're trying to buy real estate, or whatever you're trying to buy, if you want to make a film, if you want to do a startup company, venture capital, all this stuff works exactly the same way. And here's the interesting thing that most people do not know. Most people are thinking, well, gee, this is a very kind of unusual investment, where people, buy things and put their money in the pot. Do a lot of people know about it? A lot of people know about it. We'll talk more about that in a little while. So from the money syndication basics, the one thing that you need to understand is that people in the money business make more money than anybody. Why? Because they're the closest to the money. In our economy, the people who are the closest to the money make the most. The closer you are to the money, the better. The people who are the furthest away make the least. So who's the furthest away? Well, school teachers are far away. Firemen, policemen, they don't make a lot of money. Unfortunately, they are far away from the money, and unfortunately, they make the least. I'm not saying they should make the least, but they do. Who makes the most? The guys on Wall Street, the investment bankers, the people that are right in the middle, the people that are intermediating these transactions, because so much money, they're taking a little piece of a lot, and that adds up to be a lot after a while. So I always like to start by asking a couple questions. And one question, think to yourself, there's the way that you raise money, and there's the way that Wall Street raise money. And now, do you think that your way is the superior way? Do you think that the way that you do it is so terrific that the guys on Wall Street are going to come to you and say, gee, could we have a tip from you on how to make some of this stuff happen? Because clearly you're doing such a fantastic job. Well, listen, joking aside, that is not at all what happens. What happens is that we want to look to those guys and say, how are you doing it? So the way that they do it is through a process called syndication. Hedge funds, syndications, all these kinds of LLC structures, they're all the same. And we're going to kind of get into that right now, because that's exactly what we want to understand. Okay. All right. So how do you finance properties? Probably using either a combination of hard money, private money, and hard money and private money are not all that different. They can even be sort of the same or overlap. You form joint ventures. I mean, there's all different kinds of ways that they do it. How does Wall Street do it? Well, Wall Street has a very clear and simple way that they make this stuff happen. And the way that that happens is that they put the property into an LLC, and that LLC then they sell the shares of stock. We'll get into that here momentarily. So what Wall Street is really, really good at, better than anything else, is slicing up assets like a loaf of bread. So what they'll do is they'll take a piece of real estate and they'll put it into an LLC, and they'll slice it up so that each person can buy a share or as many shares as they want. So you say, okay, look, each share is $25,000. We have $1 million worth. How many do you want? Well, one person might say, I want 2. Somebody might say, I want 4. Another guy might say he wants 8. And then altogether, it adds up to the total number that you need to raise. And that's what Wall Street is fantastic at. And that's what we're going to do. So we're going to use a stock market kind of idea to raise our money. We're going to slice up the asset like a loaf of bread. And we're going to do that by putting it into an LLC. And we're going to sell shares of stock in that LLC so that we can buy the asset that we want. That's really the name of the game here. Okay, how do you slice up the real estate? Well, the first thing is you form an LLC. You have an attorney set one of these up. And then you go and you crowdfund or raise the money from a bunch of people. You sell those shares to a number of people. The next thing that happens is that you elect a president. So your little LLC is going to need a president. Now, that president is going to hire all the vendors, the brokers, and other people who need to represent the LLC. Now, if you're licensed as a real estate broker or as a mortgage broker or as a general contractor or as any other thing to manage this corporation, then you can render services to the corporation. You can render services to your own corporation. So you can be the property manager. You can be the real estate agent. You can be the note agent. You can be the servicing agent if you're licensed to do that. So all the different things that you're licensed to do, you can do those things and you can charge a fee to the business that you've set up. And the bottom line here is that your goal is to be your own client. What you don't want is to really be a client, have all these other people be your client. The problem brokers have is that brokers, they work hard, but they don't control anything. So they run out, they get a bunch of people ready to buy. They have a seller, they have a buyer. And one day before the thing is ready to close, the buyer wakes up in a bad mood and says, screw it, I'm not doing it. Forget it. Let's just cancel the transaction. I don't care about my deposit. I walk away because the guy's in a bad mood or something happens. Well, that broker was counting on something to happen, didn't happen. And that broker doesn't have any control. In this situation, I'm the broker of my own transactions. I'm in complete control. I don't lie to myself. I don't pull on my leg. I don't joke around. I don't reduce my commissions. Everything happens the way you want because being your own client is a very, very cool aspect of this business. So once you raise the money, then you go out and you buy the real estate and you put that real estate into the LLC that you've raised the money for. It's very simple, really. Set up an LLC, put the money in the LLC. The LLC then goes out and buys the real estate that you want. And the investors who put the money in get shares of stock. This is the most simple formula. It's a little bit of trouble to do it, but it's really the simplest thing you've ever heard of. Now, why go to all the trouble to do this sort of thing? Because there's a lot of benefits to the promoter for doing it this way. Wall Street would not do it this way if it was not a superior way of doing it. And that's really the most important part. So what is the benefit to the promoter? So let's talk about some of those benefits. Number one, the promoter has absolute control of everything that happens. Everything. That means when it's time to pull the trigger to buy the property or to buy the note or to negotiate the deal or to foreclose or whatever it is they got to do, the promoter, the person in charge of the LLC, what I called the president before, that person has absolute jurisdiction. So the investors give that person the money, and that person then has absolute control over what to do in running the deal. They don't have to call and ask. So let's say you want to buy another one, or 2 weeks later you want to buy another one. You don't have to go back and ask the people. They've already given you permission to run all your stuff. Imagine having a pool of money that you could actually just do what you need to do to run your business. These people trust that you know what you're doing, that you're going to do a good job, and that's why they've engaged you or hired you or trusted you to run their deal for them. And that's really the most important part of this concept. So because the money is ready in advance, your cash is always ready. Now, when your cash is ready and you walk into a room, you get what I always think about as a readiness premium. So let's say the two of us walk into the same room and there's a note for sale, and the note for sale is $1 million. You know, let's say it's whatever it is, the sale price is $1 million. And I go, gee, $1 million, that sounds pretty good. Okay, I'll be back in a couple of months with the money. A couple of months with the money, that's not okay. I want to close this thing out like right now. I walk in instead, the guy with the money, the hedge fund guy walks in and says, hey, listen, how much is this thing? It's 800, it's $1 million bucks. Million's a little steep. Tell you what, give you 800 grand, but I got the money with me here right now. All I need to do is a little bit of due diligence, go through a little escrow process, do a little title work, make sure everything is good. We can be closed in 7 days. The person on the other side will almost always say, tell you what, how about 8.25? Let's just button the thing up, or 850 or whatever the number is, but it'll be something off of their $1 million. And I will have gotten a discount just for being ready. Think about how often you get the discount just for being ready. I mean, how much margin is there just for being ready? And the investors know that. The investors who give you the money know that if they can help you be ready, if they can put bullets in your gun, if they can help you go into the marketplace and be ready, that you're going to get these readiness premiums over and over and over again. And when that happens, they're going to get the benefit of some of that activity. So bottom line here is that this is a win-win for everyone. Now, here's another important thing. Some people ask me, well, Joel, do I have to put all my deals into the fund that I set up? Well, what if you find a deal, that is outside the parameters of the fund and you just want to do this one by yourself? Fine, you can. These deals are not exclusive just because, the fund gives you money to go buy certain things. Now, that being said, you don't want to put the crappy deals in your fund and keep all the good ones for yourself. That wouldn't be a business. That would be a disaster looming over your head, ready to crash down on you. So you want to be very careful not to let that happen. But what you want to do is you want to make sure that you're putting good deals in your fund, that the fund's making money. And once in a while, you're going to find something that, let's say, is outside the goal of the fund. Let's say the goal of the fund is to buy things that are going to last for a couple of years, and this is maybe a longer term one, has a different yield, or is in a different geography, or has some different kind of a characteristic that your fund isn't set up to do. Then you might get a couple of other people and just go take that down by yourselves and not put that in your fund, and that's perfectly okay, as long as you set it up that way in advance. Now, here's another thing, and this is very important. When you buy an asset, you typically, if you have to finance it, you typically will have to borrow some money. Even notes, you might have to borrow money, from investors or other people, your hard money, your private money people, and you're going to pay them interest. Now, interest is a contract. And when a contract like interest, if you fail to make a payment for some reason, whatever the reason is, doesn't make any difference, and you fail to do it, you now are in breach of that contract. So if you breach your contract, then they can foreclose on you and they can take your asset away from you. And all the money that you put into the deal can evaporate in like 5 seconds. It can just all be gone. And that's really a big problem. So the way that these Wall Street deals are set up, and the way that we set up our funds, and the way that I would urge you to set up your syndications or funds, whatever structure you use, is to set them up so that you don't have an interest payment, but you have what's called a preferred payment. And a preferred payment is you make your best effort to pay the people, and they get paid, the investors get paid before you get paid. So if you don't make a payment, then this quarter we couldn't make the payment, but we'll make the payment next quarter instead. It rolls forward. And if you're buying distressed assets and you're having to redeem distressed assets and rehabilitate them and cash them in and do whatever, you're going to find that cash flow is not always perfect. And you want to set up these preferred kinds of arrangements, because that's what's going to make it possible for you to stay in the game. Better pricing on the capital. When you go to these hard money people, most of these people are professional or semi-professional investors. They may know more about these assets than you do. And a lot of your money is going to go to interest. A lot of your money is going to go to points. And a lot of the expense of the deal is going to go to these people. And a lot of what you want to accomplish is going to be left out. And therefore, when you deal with the kinds of people that put money into private placements, you're going to get much better pricing on your capital. And better pricing on your capital means that you're going to make more money because you're paying less to the investors. And there are formulas, the way that we share money with investors, and we can talk a little bit about that maybe during Q&A or later, but the money is much less expensive. I mean, these are all the reasons why people put these deals together. If these things weren't better, we wouldn't do it. I referenced earlier a little bit about the revenue octopus concept, and that means that there are many different ways that you make money on this deal. One way is cash flow, one way is going to be long-term profits. Those are great ways to make money, but you're also going to be the broker of record if you have to buy the real estate, if you have to issue a mortgage. You might be the lender, the servicer. There are all different kinds of ways that you can be involved in these things. And that's just a critical component of putting together a really good deal, is that you get paid in a lot of different ways. So and we'll talk about that more in just a second. And I always call that getting paid for being smart and getting paid for your time. Getting paid for being smart means that, hey, you pick a really good note, it's a distressed note, you turn it around, you fix it, and you make a bunch of money on some spread. That's awesome. That's fantastic that happens. But what about all the time that it took? If you don't get paid for your time and you only get paid for the being smart part, and 6 months goes by in between deals that you can do, the amount of money that you're going to make is going to be very limited, because the amount of time that it took for you to do these deals, you're going to have to be forking out money to live. And that's very problematic. So you want to get paid for your time and then get a big bang on the back end when you sell the asset and demonstrate that you've been smart. So let's talk about some ways that you get paid for your time. One is those third-party vendor fees, which I already mentioned. And you have to disclose all this stuff. There's no secrets. What makes it proper and legal is that you've properly disclosed all these things. You also want to get paid for stabilizing the property, and all the other things. And we've got a whole list of fees that in our symposium program, which is our twice-a-year program. And here are some examples of this. You can see that there are front-end fees, there are back-end fees, there are ongoing fees. There's just all kinds of different ways that promoters get paid. And by the way, setting all this stuff doesn't cost anything, because the fund takes care of its own legal responsibilities. And that's an important part of this whole process. Now, paid for being smart, that's your participation in cash flow, back-end profits, and the rest. And let me just tell you that this is a very important tip. You want to make sure you take your profit share before calculating the cost of your capital. Most people, what happens is that you buy the asset, you pay your expenses, you pay your interest, and then whatever's left, you split what's left between you and your investors. You'd make a lot more money if you pay for your asset, pay for your expenses, but not the interest. And then right there, that's where you split. So in one of these kinds of Wall Street type deals, the investors do not get paid their interest and their profit share. They get paid their interest or their profit share. And that little nuance makes a very big difference. So these are the kinds of things that you really want to be surrounded by, people who've been in the trenches for a long time. Most people who tell you that they know all this stuff don't know all so much about this stuff as they tell you. So here's really one of the big revelations. And if there's one thing that I hope you take away from this, Scott wants you to be in the note business or the real estate business or whatever. He wants to help you to get into this business. I'm telling you, that is not what you want to do. And this doesn't contradict Scott. What this does is it supplements what he says. The truth is that the money is not made in the notes. The money is not made in the real estate. The money is not made in the film. The money's not made in the venture business and so forth. The money is made in the money. Controlling the money is what makes it possible for you to make even more money. So the more money you have, the more notes, the more real estate, the more assets you can buy. The more assets you can buy, the more money you can make. And that's what makes this a lucrative business. So I want you to move right this minute. I want you to start thinking about yourself, not in the real estate business, not in the note business, but in the money business, because it's the money that enables you to make the money that you want to make. So just know the money's not in the real estate, the money's in the money. As long as you understand that, you're going to do very well. So I've got a wholesale. This is a real estate example. It doesn't apply so much to notes, but I think you're going to get this because a lot of people who do notes also do real estate. So let's say some guy says, I'm going to wholesale a building. Okay, fine. That's awesome. Wholesaling is a great thing. And I think a lot of people, who do wholesale, they probably tell you that they do more stuff than they really do. But let's say that there's a building that is $1.5 million and you put it under contract and you run around town and you find a buyer and you're able to sell that deal for 1.6. So you make 100 grand. And, I don't know how often this happens, but it happens. It doesn't happen all that often, but it happens. So somebody's going to make 100 grand and that's fantastic. So they're going to net 100 and it's great. Now, if I syndicated that deal instead, let's see what would happen. And let's see which is the superior way of doing this. Okay. So syndication is the way of putting people's money together and then you go do the deal versus just take the cash, take the money and run. So in a syndication example, you put under contract for $1.5 million, just the same as this. Now I'd get a brokerage commission, which is $45,000, and then I would take mortgage points for the balance after whatever amount of down payment we made. Let's say 2 points, that's another $22,000. And then I would be taking property management fees for the next many years on the rents that came into that deal. And let's assume that we're talking about here a 5-year deal. So that's another 20 grand for the override of the property management fees. And then we're going to rehab the project and I'm going to take a little override on that too. That'll be another 20 grand, let's say, for a 10% project management fee on a $200,000 rehab. So that's a reasonable number. Then I'm going to get a share cash flow because the deal is going to cash flow. And let's say that, my share is about 80 grand over a 5-year period of time, which is probably, a fair price. This assumes $40,000 a year cash flow for this deal. And we get 40% of that. So that's $80,000 over a period over the 5-year period of time. Then we sell the asset in 5 years from now. We sell it for 2.4 million. So we net about 2.2 because remember there's going to be brokerage. And then we make $700,000 profit. We're going to get 40% of that, which is 280,000. And then we're also going to get a brokerage fee of $72,000. So all total, what did we make in 5 years? We made $539,000. And that's a typical deal. Now, syndicators will do 2, 3, or 4 of these every single year. I don't know how often these wholesale guys are doing it, but they are scrambling around looking for deals one day after the next. But syndicators are marching along. They raise their money. Now, am I telling you that raising the money is easy? No, but is it worth it? It's absolutely worth it. And whether you're buying notes or real estate, it is identical because there's lots of different ways for you to make money working with these assets. And that's what the name of the game is. So, you put 2 or 3 these in your pipeline every single year, you're going to be doing extremely well. What did the investor make? They made about 12% a year, which they're just thrilled with because they can't get 12% anywhere else. So, people would say, well, are they upset that you made so much money? Are they upset we made so much money? They made so much money. They made an amount of money that they couldn't have made anywhere else. So as long as everybody wins, then everybody wins and it's awesome. So hopefully you're starting to get it because this is an awesome business and this is an awesome way to make money. It's the same underlying skills for notes, the same underlying skills for real estate. That part doesn't change. But when you apply the skill of the finance or the money business in the right way, it magnifies your ability to make money by 100 to 1. And I'm not kidding when I tell you 100 to 1, it literally is close to that much. So let me just give a quick disclaimer. I am not an attorney. I am not, licensed to do anything like that. So I don't do that kind of work. I am a CPA, but I'm not your CPA. So please don't ask me any tax or other kind of questions. I'm not giving advice. I'm just giving information. And you need to run everything that we're doing here by your advisors. And that's just an important thing. Now, my goal for you is for next week to be different and better than this week. And if you do some of the things that we're talking about, and I'm sure you're going to be exposed to all kinds of interesting things all weekend long. If you do the things that you're being advised to do, you will have a better week next week than this week. So we're broken into 3 sections here. Some of it's kind of quick. Just as a quick stopping point, Scott, do you want to jump in and ask any questions, or take a
Yeah,
minute?
we got a couple people asking a question. Tamara loved that. Tamara Celeste goes, I'm claiming that I'm in the money business.
Good for her. Good for her. Yeah, good job.
Terry did ask a question. He goes, how do you convince people to support your fund and set something like this up when you're a brand new investor?
Well, this isn't really, this is a little more advanced skill than for a brand new investor. You have to have a little track record. Now, I'm going to give you a trick here. Investors are not going to give you their money. It's kind of like you ever go on an airplane and see a pilot that looks like he's 25. We kind of like gray hair pilots. I mean, there's a little something about a gray hair pilot. We kind of like that. You want doctors to be, older than just interns. And the thing is that people don't want you to practice with their money. That's just how it is. There's a reason that doctors practice with cadavers. They kind of work on these low value targets that if they make a mistake, not a big deal. So people don't want you to practice with their money. They don't want you to do your first deal or two, with them. But that doesn't mean that you can't partner with people who have more experience. Now, Scott, I'm sure in your pool, you've got some beginner people and you've got some advanced people, and you got these beginner people. Maybe they got to do more legwork. Maybe they got to kick butt a little harder and they got to wash windows. I don't know what they got to do. Whatever it is they got to do, they need to do it to get some experience, and they partner with some older people. I will tell you that if a newer person brings the structure to a more seasoned person, then they're bringing real value to the table. So if they have the resources and the capability of putting some of this stuff together, and then they bring the structure to the table, that structure could be worth an enormous amount. I've seen guys, 5 times the value of the structure just for, make a couple of $100,000 on just for putting the structure together. So that's it.
Yeah, and it's all about putting a team together. I mean, that's the aspect of things like you've said throughout this, is if you can put the team together that have the experience that you don't have, or partner with people that have the experience that you don't have, and you find the deal, hey, you can still put these together relatively easily.
Yeah, you can. And, now the question goes back to who would fund it. You might need to be around people who are a little more experienced, because the investors are going to say, well, gee, who do they know what they're doing? Well, yeah, I'm on the team with these 3 other people, or 2 other people, or 1 other person, and they're very experienced. Perfect.
Yeah. Another question here is, Laura asks, at about what value does it make more sense to syndicate instead of creating a fund?
Syndications and funds are not based on dollars. The difference between a syndication and a fund is that this is really a personal definition, because I don't know that such a definition really exists, but a syndication is a project. So you buy an asset, let's say an apartment building. You buy an asset, you fix it, you run it, take the cash flow, whatever you're going to doing. 5 years later, you sell it, give the money back to the investors. You keep your cut, they get their cut. The deal's done. You wash your hands and you're done. That's it. It's over. A fund is an ongoing structure. So you buy an asset like a note, you put it in, rehabilitate it, sell it, keep the money, maybe give a little profit to the investors, but you keep the money. Then you go and you buy another asset, put it in, buy another asset, put it in, sell it, take money's coming in, going out. You're paying profits to the investors, but you're always keeping the principal together. That's what a fund is. A fund keeps the principal together so that you can always have money to operate. So a project, a syndication project, is raise the money, do something, sell it, give the money back, and you're done. But a fund is an ongoing thing. So it's not so much about the number of dollars as it is about, whether you want to do a project or have an ongoing arrangement.
Makes sense there. Bob asked the question, do you need to be a licensed broker to do this?
You don't need to be licensed to manage or run a fund at all. Now, for the same reason, when you buy a piece of real estate, or let's say you want to sell your own house, you don't need to be a broker to sell your own house. You need to be a broker to sell someone else's house. So when you're selling the shares, let's say you're selling to investors, it's your own company. You're allowed to sell the shares of your own company because the company can't do it for itself. A person has to sell the shares of a company. And so therefore there's what's called an officer's exemption. So you don't have to be licensed. Now, if you want to be the broker of record, you need to be licensed as a broker. If you want to be the contractor of record to do the rehab, you need to be licensed if you want to get paid. So You only need to be licensed for the things where you want to render services, not for running the fund itself.
Mm-hmm. And then Montre says, okay, great answer. He goes, where can I meet the investors, or where can I meet them at for the fund that will fund these deals?
That's a great question. And we're going to deal with this toward the end of our program here, but investors are everywhere. They're literally everywhere. You know, here's the funny thing. People who are looking for jobs are sitting worrying about getting a job. And then there's employers sitting worrying about how they're going to get employees. And it's a lifelong problem, you know. Men are looking for women and women are looking for men, and they can't find each other. And so there's that problem. And the same thing with this. So we have a matchmaking problem. You know, we have investors looking for investments, and we have the promoters of investments looking for investors, right? So where people are always looking for each other, and that's always an issue. But these people are everywhere. They're in bars, they're in restaurants, they're in elevators, escalators, they're in cars, they're just everywhere. They're absolutely everywhere, but you don't know what to look for. Now, I would imagine that most people know what a hard money lender looks like. They know where to go find a bunch of private money lenders, because when they go to these RIA groups or they go to these kind of conferences, those are the people that show up. So you've been looking for those people and you start finding them. Then you get their business card, you put them in your Rolodex. But if I taught you how to look for investors that are looking for passive investments, not these semi-professional, professional people that are looking to make hard money and private money loans, but if we learned how to find regular investors, you would start finding them. And at the end of the program, I'll tell you this little story about the yellow car. Most people have never seen a yellow car. They just don't pay attention. There are plenty of yellow cars on the road. And now that I tell you to go look for a yellow car, I promise you, you will see a yellow car the next time you go on the road. Now, of course, during the pandemic, there may not be a lot of cars out on the road, but under normal circumstances, you go out. If you're looking for yellow cars, you're going to find yellow cars, and investors are yellow cars. They're out there. You just have to know what you're looking for, and you just have to start looking for them. They are everywhere.
Perfect. Good stuff. Allison asked a question. She goes, I thought we were only allowed one investor per property. What is the difference in this approach, Joel? She's talking about pooling funds.
Oh, well, there you go. And you've been given good advice. You know, you take one investor and you secure them against the property, because they're kind of like a lender. A lender, you take one of them. You can't put many different people in a chain. It's very complicated. But the reason that Wall Street does it this way is because they don't want to work with one person at a time. So this allows thousands or millions of people to get involved. Not in our deals. Our deals are, 10, 20, 30, 50 people. But, but this formula, this whole format makes it possible to raise much more money because people are putting in smaller amounts. So instead of looking for one giant investor that puts in 500 grand, instead what you have is 20 people that each one puts in 50 or 100. Now think about that from a lot of different perspectives. One, it's a lot easier to find people that have 50 or 100 than it is to find a 500, and there's a lot more of them out there. The second thing is people that put in 500, they tend to push their weight around pretty good. They don't just give you the money and say, yeah, don't screw this up. They tend to stay somewhat involved. And they may be your joint venture partners who go 50-50, and that's a whole other set of problems. But, if you want more control and you want really to build a business out of raising money and being in the money business and doing deals, then you're going to want to take more money, more increments of money in smaller increments from more people. And that's really the secret to making this work, is you want to have more people come in smaller increments. And that's how you build a business. And you just get people in the habit, because people that have 100 know other people that have 100. And then, what'll happen is a couple people will be playing golf and they'll be talking and they'll say, hey, listen, what are you doing? Any interesting things with your money these days? Yeah, you know what? I just put a bunch of money with this guy named Scott. He's kind of a cool guy. He's got a lot of experience in this and this. Well, really, you think I can meet him? Yeah, of course. Happy to introduce you to him. And then he gets referred, and that's how it works. Now, if you've only got one or two clients, of course, that's not a lot of geometric. It's not going to explode. But when you get 5 or 8 or 10 or 20, and then each one of them makes a referral every once in a while, all of a sudden you're going to have a nice flow of money into your business that's going to allow you to constantly take in money. And that's exactly what you want to have happen. So I hope that explains the difference between one person and these structures that are purposely designed to take in lots of people.
Perfect. Good stuff. That's all the questions we got right now, Joel.
That's it, huh? Okay. So let's go on. We'll do the next section, and hopefully there'll be some more questions. Okay.
Yep.
All right. So we're just going to quickly go into a couple of things here. We already talked about the basics, the money business basics. Let's talk about why funds, why organizations like mine and potentially like yours in the future get the best deals. And it's a funny thing, but we certainly get the best deals. And then finally, we'll talk just a little bit about crowdfunding because everybody's always interested in that. And you'll hear what I have to say about that. And then we'll have more time for some Q&A. So first I want to tell you, I'm not making this up. I've been in this business for 30 years. I spent a lot of time at the School of Hard Knocks. I've done a lot of different things in my career. I started at the CPA firm of Price Waterhouse. I spent 4 years in syndication after that, and I learned the syndication business doing tax work at Price Waterhouse. So that's kind of where this all came from. Then I ran this thing. I got this idea for delivering stock quotes to investors by fax. We built this, me and another guy who was a brilliant computer guy. We put this together. I went out and raised $10 million. And let me tell you, once you learn how to raise money for notes, and you can do it for real estate, you can do it for venture, you can do it for film, whatever you want to raise money for. Once you learn how to do it, you can do it for anything. So we raised money and built this company called Financial Facts, which I ended up selling to a Fortune 500 company 5 years later. And during that time, I was on Wall Street and I learned more and more about how all this works. And then I went in the venture capital business, and I just have been buying and selling companies and being involved in companies. And about 7 years ago, I started my fund, and I've just been doing that ever since. So that's, that's the deal. So, all right. Anyway, I asked a question, for you to ponder, which is more important, the capital or the deal? And this is always a great debate, but I will tell you from my perspective, the people that have the deals will tell you the deals are more important. The people that have the money will tell you the money is more important, but I will tell you the money is more important. And here's how you know that. If I was to go into a RIA group or a meetup or any of these kind of clubs, and I said, let's say that there's a bunch of people sitting at the table and somebody raised their hand and said, listen, I have the most smokingest hot deal. It is so awesome. You guys are going to love it. And, and all the people in the room, they're looking. You know what happened? Nothing, because nobody has any money to buy the deal. That's the problem. I walk in instead and I said, listen, I got a bunch of money in my pocket. I have to get it spent by the end of the month. You know what happened? The meeting will stop. People will line up and they'll start pitching me deals, because that's really, in real estate, what matters the most is the money. The people that have the money are the people that make it happen. I mean, there's a lot of real estate. It's not all great real estate, but there's plenty of real estate, but you need the money to make it happen. And that's, at our level, at the smaller level, that's kind of what it is. Now, at the higher level, where there's tons of money circulating, it's a little bit of different economics. But I will tell you that where we are, the supply of money is outstripped by the demand for it. And that's really important to understand. So, all right. Professional investors, and I'm a professional investor, and I hope that you all think that you guys think of yourselves as professional investors as well. Are professional investors 500 times smarter than other people because they frequently make hundreds of times more money? Well, no, I wouldn't say that they're 500 times smarter at all, but they understand things that other people do not understand. And I asked the question, why do professional investors make more money in 5 days than most other people will make in 5 years? And if you've never thought about this, it's really important to think about it, because professional investors make money over and over and over again when other people just lose their shirts and just can't figure out what's going on. And there's two sides to this. Part of it's the money, part of it's the deal, and and our ability to just source deals and kind of be in the game. But there's kind of another reason in our society, and some of this will resonate. Number one, we understand deal structure, and that's certainly important. We understand the marketplace. That's certainly important. We're totally focused on getting deals done. That's certainly important. And we're ready. And being ready is important. And all those things are the reason why we make more money than other people make. But I will also tell you there's a big reason that nobody talks about. And that's because when it comes to money, listen to what I'm going to tell you. When it comes to money, everything is rigged. Absolutely everything about the money business is rigged. Somebody has written the rules in their favor, and they're working the rules in their way. And that's the bottom line to this. And you need to understand, do you want to be aware of the rig? Do you want to be riding the rig, or do you want to be subject to the rig? And you have to really think, which way does it work? And you say to yourself, why don't I get the best deals? Why do other people get the best deals? That's because the system is rigged. Now, do you want to be on the inside of the rig or the outside of the rig? And I'll tell you, I would prefer, the reason I'm here with you, the reason that Scott's asked me to share with you, is because I understand the inside of the rig, and I'd like to help give you a couple of insights to bring you on the inside with me. In fact, if you wouldn't mind, just put in the chat box right this minute, I want to be on the inside of the rig, because that tells me at least you're paying attention and that you're with me here. So if people want to be on the inside of the rig, right, I want to be on the inside of the rig. And if not, then, stay on the outside. All right. And we'll get a couple people that'll certainly want to be on the inside. All right. So let's talk about how the inside works. Okay. Number one, he who writes the rules rigs the rules. That's it. He who writes the rules rigs the rules. And you want to be on the inside all the time. That's just where you want to be. Now, how does this work in real estate? How does the rig work in real estate? There is a total rig in real estate. Now, let me tell you, there's nothing illegal about the rig. It's just the way that the system is set up. And there are people who will like it, and there are people who won't like it. But I'm going to tell you right now, there isn't one of you who cannot be on the inside of the rig. Not one. This is not anything about what you look like, who your parents are, where they were born, who you believe in, what your friends are. None of those things matter. What matters is that you learn how to do this, and you learn how to do it correctly. So let's talk about how this works. Okay, why do funds get the best deal? Over and over and over again. Why will I walk into a situation, take down a property, and make more money in 5 days than other people will make in 5 years? I was on an airplane next to a guy one time. And the guy says to me, what business you in? What do you do? And I said, yeah, I run a real estate hedge fund. He goes, oh, I like real estate too. I do a little real estate investing. I said, oh, really? Let me ask you a question. And I go through this thing, what we're going to talk about right now. And I said, if let's say that a real estate investor, somebody owned a property at 4th and Main, they called their broker in a panic, and they said, listen, I got every problem you could think of. The government's chasing me. My business partner's cheating me, and my wife is leaving me. I got all these different problems, and I got this building at 4th and Main, but the government's going to put a lien on it here in 3 weeks or 2 weeks. So I need to sell it, but I'm willing to sell it real cheap. So it's worth $1 million free and clear, but I'll take 600 grand, but I got to have the money by a week from Tuesday. Otherwise, that's it. The government's going to put a lien. I won't be able to get the money. So I asked the guy sitting next to me on this airplane, and I ask each of you sitting in the audience here, would the real estate broker call you? And the guy in the airplane got really mad. He said, you really are snot. You hedge fund guys, you're snotty guys. I go, why is that? He goes, of course the broker would call me. Why wouldn't he call me? The money in my wallet's as green as the money in your wallet. I said, no, it's not. I said, your money's not nearly as green as mine. Not even close. I'm going to show you why. Want to see why? Here it is. Number one, my gun is always loaded. I am always ready. That's the first most important thing. Now let's take a look at some other things. That broker, he calls me. Why would he call me? Well, all year long, who's doing deals with that guy? The guy on the airplane or me? I am. So the guy's going to, if the guy gets a smoking hot deal, he's going to call me first just because he wants to take care of his best customers. Number two, my cash is ready. Now, I said to this guy before we got talking, I said, so how much money you got? He goes, I got a couple $100 grand. I go, great. So this building's 600 grand. How are you going to take it down with just a couple $100 grand? And he said, well, I'll get a loan. I said, you're not in a week and a half, you're not getting a loan. That's not happening for sure. So my cash is always ready. Due diligence. I could have, I could have my guys ready anytime. The brokers say, okay, we're having a due diligence appointment on Thursday at 2:00. The guy says, oh no, sorry, I'm in surgery. I've got an appointment. I got to be in court. I got this problem, that problem, that problem, that problem. I can't do it Thursday at 2 o'clock. I could have a team of 5 people in any city in America on Thursday at 2 o'clock. So there's nothing more important to me than doing this deal. And that's really one of the other most important things. This is all part of why funds and guys like us, people like you, get the very best deals. It's because of all of these things. My schedule is clear. There's nothing more important for the next 7 days that I need to do than work on this transaction. And I'll make that happen. I don't have to borrow. My money's ready. I don't have to waste any time. Nothing's going to get in the way. Nobody's going to say no. Nobody's going to interfere. If it passes due diligence and I want to move forward, we're moving forward. Here's next. I respect the guy's commission. He doesn't know about the guy on the airplane. Is that guy going to try and negotiate him at the last minute on the commission, try to reduce him, make something happen? With me, he's got history. He knows I respect his commission. That's very important to him. Here's another thing. We're in the network together. We may play golf together. We may go to restaurants together, belong to the country club together, whatever the thing is, we may hang together. That's very, very important, is that we kind of circulate in the same circles. That matters a lot. And finally, there's a little bit of horse trading. Horse trading means I'll do a favor for you if you'll do a favor for me. And what does that mean? The guy says to me, the real estate broker, he goes, hey, Joel, listen, I just threw you this smoking hot deal. I know you're making a lot of dough on it. But would you do me a favor? That private equity guy that you're friends with, do you think you'd arrange dinner for the 3 of us to get together? I'd like to meet him. No problem at all. Happy to do it. So here's what ends up happening is I take down the property for 600 grand. I turn around to the guy sitting next to me on the plane or to the doctor or to whoever the customer is. And I say, hey, listen, I've got this smoking hot deal for 900 grand. It's worth $1 million. Do you want it? Oh yeah. That sounds just fantastic. I'll take it. And then we end up buying property for 60 cents that we sell to the doctor for 90 cents. Just 2 days later, 5 days later, 7 days later, he thinks he's getting a smoking hot deal. And we made more money in 5 days than he'll make in 5 years. And that is how it works every single day. Every day, that's how it works. Now, nothing illegal happened in this transaction. Nothing improper happened in this transaction. It's just the way that it works. And I want you to learn how to do it the same way. But in order for it to happen, you have to be in the game. You have to be ready. You have to be organized. And if you don't come to the table ready and organized, then you'll just never be a player in the game. And that's just, that's it. I mean, isn't what you try to do to take things down for 60 cents that you can sell for 90, overnight and make more money in 5 days than other people make in 5 years? That's exactly what you want to do too. So I'm just showing you how to do it. So the question I ask you is, if you had more capital, could you do more deals? And if the answer is no, well, I don't really have any deals to do, then you're too early to do this. But if you're sitting going, God, I got 1 million deals. I got access to so many different deals. If I had more cash, I could do more deals. Then that's what we got to do here. We got to help you to get some more cash. And then crowdfunding, which is our third part. This is kind of a fire hose, and we're not going to have time to get this. So what I'd ask you to do right now is take out your mobile phone, just real quick. We produce videos. We have an enormous library of material. It's all free. That helps you understand a lot of these concepts so much better. And so what I'd like to ask you to do is open your texting app. In the to box, put in the number 72,000. And then in the message box, write the word asset and just send that in. It's going to send you a little text back that says, can we send you some messages? And you'll say yes. And then it'll say, give us your email address or whatever it is. And then you'll give it to them. And then we'll start to notify you when we have new videos. We are not hardcore marketers. We don't overdo it. We just send out information on our syndication stuff. And if this is something that you want to learn, then this is the kind of stuff that you want to have access to, because whether you're ready now or you're ready in 6 months, this is the kind of material that will take you to the next level, no matter where you are. You really need to be working on this. So text asset to 72,000. That'll make a big difference for you. And we are regularly adding to our libraries. And I mentioned earlier about the yellow car. Just think about that as we go forward. Think about, looking for yellow cars. Right now, you're not looking for yellow cars. You don't know what investors look like because that's not what you're oriented to. But that's what you need to get oriented to. So I ask you, is this something that works for you? Are you ready? When the student is ready, the teacher appears. Is this something that's ready to happen? If so, then, I'm here for you. And I'm happy to show you how to start looking for yellow cars. And by the way, here's the thing. You can't start looking for yellow cars and people say, oh yeah, I want to be in your deal. Here's $100 grand, because now you're not organized to take their money. So you have to have a lot of things have to happen at the same time. You can't go into the marketplace, tell people how great you are, how many deals you have, how much stuff you're working on. And then when they offer to write you a check, you can't take it because you're not organized to take the money. So, you have to be organized in order to take the money under these circumstances. And that's really important. So here we go. If you're ready and, you want to start controlling some money, then I'm going to invite you to participate in our symposium program. If it's not for you, no hard feelings. I mean, this is something that could be really cool for you. And if not, I certainly understand. If you're a real estate professional, if you're a financial or intermediary type person, if you're an asset class specialist, then you're eligible to come into our program. Somebody says the schedule link didn't work. I will, if somebody send me a text, I'll look into why it didn't.
Actually, that Joel, that's not for you. You're good. I mean, that's somebody else's thing to worry about.
Oh, sorry. So if you're an asset class specialist, you got to meet one of these 3 criteria. I mean, everybody who comes to our program has to meet a criteria, and that's you either have to be a real estate professional licensed in some state, a financial or intermediary type person, or you have to have an asset class specialty like notes, like apartments, like fix and flip, something like that. So once you meet those criteria, you're eligible to participate. And the bottom line is you have to have some track record. If you don't have some track record, you're going to have a hard time getting investors. Now you could partner with other people that do, and that would be an acceptable approach too. So if you're, kind of earlier stage, then we need to get you partnering with some other people. So bottom line is that we have a program, and Scott, I think you're coming to this one, aren't you?
Yep. I was planning on the early one. Then when you pushed it back to October, I even got more excited about it.
The whole world got pushed back, so we got pushed back too. But we're planning on Vegas in October, the 25th to the 28th. This is the most extraordinary experience. I promise you. You will never be with a group of higher level people. I mean, we attract very high level people, and this is just awesome. This is our 24th national event. We do this twice a year, and it's been going on for a while. So this is an extraordinary opportunity for you to learn how to do this, how to raise money, how to be with other people. We do some role playing. We learn the rules. We practice. We kind of write some drills. We do a whole bunch of different things, and we make it work out. It'll be in Las Vegas. If we cannot do it in Las Vegas for any reason, then we'll figure out a way to live cast it. We'll do a whole thing, kind of like what we're doing right now. There'll be 50 seats available nationwide. And remember that we had to collapse 2 programs into one, so some number of those seats have already been, spoken for. Best networking, I promise you that you'll see. The seats are $2,100 a piece. I mean, it's for what you're going to learn. We're giving it away. I mean, this is the kind of, I'll tell you this. People have said you could charge a lot more money, and we could charge, probably earlier stage people would pay $10,000 a seat, but we really are attracting higher level people. And this is really about building a network. So we charge a smaller number of dollars, and then we end up building the structures for people, and we help them get up and running. And we just, there's money moves in lots of different ways here. But this is just kind of where it starts, because we help you get in a business that will spend more money than anything you could possibly do. You need to have the foundational skills in either real estate, notes, or the other things that you're doing here with Scott and those. But when you're really ready to put some rocket fuel in the tank, then this is really what you need to do. You need to learn how to build structures that make this work. So bottom line here, if you need to, if you're interested, you can go to Deal Making Symposium. You can buy a ticket. You can get on my personal calendar. You can talk to me in whatever way you want. And, I tend to talk to people before they get involved to make sure that it's a good fit. But this is, we don't charge a lot for what happens. I mean, this is really, this is a really high level program. It's a high level network. This is not for a bunch of retail wannabes. This is really for people who are really making stuff happen, and it's we'll treat you with a lot of respect. So bottom line is that I've got a friend, Leonard, and Leonard says that rich people dig for gold and poor people complain about the price of the shovel.
I love that. Hang on a second. I gotta take a screenshot of that because that's good. That's a quote of the day right there.
But isn't it true, Scott? I mean, it's like, I'm going to show people how to make all this stuff happen. And the more sophisticated people, they don't even blink. They just say, okay, other people, whatever it is. So it's none of my business. People do what they do. But bottom line is that we're offering something very substantial. And I just hope people will go out and stake their claim.
And honestly, there's a lot of money made in crisis in a good way. There's a lot of people out there talking about the yellow cars of people who have been laid off. You talked about, Lindsay talked about pilots earlier on, people being furloughed, let go, early retirement, and companies, there's a lot of money sitting in the market that needs to go somewhere else these days, right? A lot of people looking for their own yellow car to buy or invest in. You just got to know how to communicate and have the setup. And that's the beautiful thing that I love about what you do. You take all your experience and all the expertise in helping 150 plus PPM or hedge funds or 200 plus now, you probably lost count, and applying that to the class, correct?
Yep. It's this is the way business gets done in America. And let me just say one last thing. Selling shares in an LLC, it's called a private security. And a lot of people say to me, well, Joel, has anybody ever heard of this before? Let me just answer that because that's a really important question. Has anybody ever heard of that before? Let me just tell you that all wealthy people know exactly what this is. All accountants know exactly what it is. All CPAs know exactly what it is. All attorneys know exactly what this is. The IRS knows exactly what this is. They don't like it too much, but the Supreme Court of the United States has said that these rules are reasonable and they have to go along with it. So everybody understands how it works. In fact, they understand it so well that private securities, the market for private securities, is bigger than the entire United States stock market.
Wow.
Now, why would it be bigger than the entire United States stock market? What asset is held in these private securities that would make it bigger than the whole stock market? Put it in the chat. Anybody know? Put in the chat. What assets held in this in these LLCs that is bigger than the whole stock market? Real estate. That's it. Mm-hmm. Most of the investment real estate in the whole country is owned this way. And so wealthy people, they all know exactly how this works. It's very, very well known. It is very well understood. And, you may not understand it, but the people that you want to go to, they all understand it very well.
We got a question from Bob. Asked a question because if the money is raised before the project, what is the sales pitch?
Well, so here's what you do is you create a theme or a charter for your fund. And you say, we're going to buy distressed notes in this part of the country, or we're going to buy distressed notes in the multifamily sector or the commercial sector or whatever you decide. There's some charter you're going to do. And we're going to look for properties that have this kind of profile. And the reason that we're good at solving this problem is because here's the assets on our team. And you create some materials, and we help people do this all the time, is create the executive overview materials that people read and they say, well, gee, that sounds like exactly the kind of deal I want to be involved in. I mean, you've got the experience to do this exact thing, and you're going to get the readiness premium because you have the money in advance, and you're going to be ready, and you're going to take advantage of these things. And people understand that this is how money gets made. Money doesn't get made at Wells Fargo having their money sit there at 0.25%. Money gets made because they take some risk and they own real estate. Now they can buy regular real estate for 5% or 6% or 7%, or they can buy some distressed real estate and they can try and get 12. Now they're not going to give you 100% of their money. So they may put 70% in the stock market or whatever they do, and they may put 20% in regular real estate, and they put 5 or 10% in distressed real estate. But they slice it up in whatever way they do it. So that's why it's hard to find people with 500 grand. It's not that some people don't have 500 grand, but they're not going to give all of their money to you. So if a person's got $1 million in the IRA, it's not that hard to get them to give you $100,000 to, they slice off one little part. They got to put it somewhere. Might as well put it in either good quality real estate or distressed real estate that's going to turn into quality real estate. But you have to create not only a pitch, but you got to create some executive overview materials, almost like a little pitch book that helps people understand what you're doing, why you're doing it, why you're the right people to be doing it, what problems exist in the marketplace that can be monetized, what your solution to the problem is, and how you're going to monetize those things. So you have to answer a lot of the questions that they have. And when you do that, then the people say, you know what, it seems like you know what you're doing. Let's do it. And I'm not going to tell you that 100% of the people you talk to are going to say yes. They're not. But you have to talk to a number of people, and the people that you talk to, you want to make sure you get it right, because those people will move forward as long as you do it the right way. And if you don't talk to them in the right way, it's not going to go your way.
Mm-hmm. Question from Dan. He asked a question: what are the typical costs of a syndication that you see on average?
The cost to build a syndication or a fund. So here's the thing. To the promoter, and the promoter is me. It's all you guys. It's the guys that are sponsoring the deal, whether they're called a promoter or sponsor or something like that. We don't pay for it. It doesn't come out of our pocket. Now, we get the benefit of all the documents that get created, because it creates almost like an insurance policy. We're telling people what all the risks are. When you tell them what the risks are, it makes it much more difficult for them to sue you. That doesn't make you lawsuit proof, but it makes it harder because you've told them what the things are that can go wrong. And by the way, when you see a pharmaceutical commercial, they tell you that you could get dizzy, you could have your nose could bleed, you could die, you could suffocate. But people still buy medicine. And we do the same thing here. We have to tell people that, a meteor could strike the building. We could be underinsured. There could be a flood. There could be a this or that. We have to tell people what could go wrong. Interest rates could change. Tax structures could change. I mean, a million things could go wrong. And we put all this stuff together. The other thing is we put together the fee structures and all the things. So you want to have all that happen. Now, there are guys that will do it for you for $10,000. I mean, I'll tell you that we charge a lot more than $10,000. But you get what you pay for. And, some people think, well, I'll just start with a little one. Well, I ask you the question, when you buy a house for your family, did you buy a 1-bedroom house for you and your wife, or did you buy maybe a 2 or 3-bedroom house that you would grow into? Because you're going to be stuck with these documents for a long time. You don't want to buy the simplest, cheapest, stupidest documents because they're cheap. You want to get the right thing. You want to think through, because otherwise you're not going to get the fees that you want. You're not going to get all the different things that you want. And there's a lot of advanced features that get built into these deals that you will be surprised that you might want to take. So for example, you might, go to somebody and say, I like that note, but I don't have the cash to buy it. Can I buy it with shares of my company? And here's how that works. When Google or Facebook or Amazon buys a company, they don't actually wire money. They go to the stock register and they write a certificate for some shares. That's how it works. Those shares become like currency. And so there's no reason that our funds shares can't become currency. And that's what we do too, is we actually use those shares as currency to buy things. So you can buy other funds. So you raise $1 million and you go buy some stuff. And now you can go do another $1 million or 2 million or 5 million. You can do whatever you want. You can take it in an apartment building. You can take it in a shopping center. You can take it in a note against a shopping center. So your ability to do more stuff and raise more money, it becomes unlimited, because now you can buy things just with the fund itself without doing anything else. You don't get that in a cheap deal. But bottom line is it's about $50,000 to put everything together. But you don't pay it. It gets paid by the fund. And so it's very, very simple. And we make it very simple for the guys to get involved with us. There
you go. Are you recommending, are people giving a projected return in the charter and the syndication?
We usually give a range, and I usually recommend that range to be about 8 to 12%. Some people think they want to tell people 30%, because by exaggerating, they think they're going to raise more money. the irony is that when you tell people 20 or 30%, they immediately think Bernie Madoff, somebody's gonna be cheating me, this guy's an idiot. They'll never get that. Now, I will tell you, professional investors regularly generate 20, 25%. But we take 40% of that. So let's say we make 20% and they get 60%, they're getting 12. So we have to do 20 to give them 12. But you can't tell them you're making 20 because they just won't believe you. Mm-hmm. So typically the payout to investors, we always try to shoot for something in the neighborhood of 8 to 12, but every deal is different, and everybody on this call and in this audience is going to have to think about what works for them and what's an appropriate rate of return based on their own fee structures and all the other things that go into this.
Yeah, great answer there. It's going to vary, and you got to look at what your costs, and you got to make sure you're putting money in your pocket first and foremost to make sure everything's rocking and rolling for you. Which is a great question, great answer.
Yeah.
Dealmakingsymposium.com is the link, everybody. You were kind enough to put your email below in the previous slide. If the scheduling link's not working, email Joel directly, and he'd be glad to send you an updated link to get on his calendar to talk about it. Full couple of days there in Vegas, right?
Yeah. Oh, I'll tell you something. It is an amazing couple of days. We have dinners together, lunches together. I mean, we really bond together, and it's every single time. We've done this 23 times. Every single time has been awesome, and we just I wouldn't keep doing it if it wasn't really exciting. I mean, I really enjoyed the quality of the relationships. We've got a fund managers mastermind. I mean, now we've got all these people. I mean, some people have raised 60, 80, $100 million. I mean, where they own just tons of real estate. Most people start 500,000, million, 2 million. They start small, but some people go, man, I got a lot of deal flow. This is really cool. So every year they raise another couple million, and you do this 4, 5, 6, 7 years in a row. And next thing you know, you got 5, you got 10, now you got 20, and then you got more and more and more. And it really snowballs, and you can really explode your situation. So if you're good at this, and this is something you want to do, I would tell you that this is something you got to get on your calendar. You have to put it on your goal sheet, or you have to start making progress toward it, because all the good learning in the world doesn't do any good if you don't have any money.
Amen to that, brother. And then Dan has a question too. Once you put together syndication, are you out, or do you continue to collect fees from it?
Are you kidding? That you just getting warmed up.
No, but hey, gotta answer. There's the question not asked is the dumb question.
Scott, I mean, no, man, you're just getting started.
Yeah, you're in the ball. You put something together, continue to pay you down.
Listen, you put this together, you're building a business that you're going to have for 20 or 30 years. It's going to take care of you and your family for a long time.
Yeah. Smart stuff there. What other final questions do you have for Mr. Joel Block here, everybody? Before we let him go, but check it out, dealmakingsymposium.com. Great event, awesome event. No, once you get signed up, he'll disclose the location because he keeps it quiet. Doesn't want people, crashing the event.
Yeah, I don't know how you are about this, but we don't have security and everything, so we've had a couple of sneakers that just show up, and the date of the event is October 25 to 28. Probably some good number of seats have already been sold, but we're in the home stretch now. We'll get the rest sold, and it's a game changer for, I would say, most of the people who show up. It's a game changer for them.
Mm-hmm. Question: does that include your spouse? Does the fee, is that per person, or does that number also include your spouse?
You know what? It does not, but I'll tell you what, Scott, for people that come through you, for some short period of time from now, and I don't know how long this video and recordings go into the marketplace, but I'll tell you what, if, for a very short period of time, I'll give people 2 tickets for 1. So if somebody wants to bring a spouse, that's fine. They want to bring a business partner, that's fine. I'd prefer that, a business partner be somebody in the same business, not somebody in a different business. Yeah. But that's up to them.
Well, you either share blood, bed, or an entity together. How's that sound? We'll put it down for that.
You know what? I'm not going there, man. I'm not sharing anything. I just, if people want 2 tickets, they can have it.
Good stuff there. Yeah, definitely. So we'll make it for a week. We'll make it, so this is Friday. We'll have the replays out to everybody Monday or Tuesday. So if they don't take action by next Friday, we'll take it away after that. How's that sound? Give everybody a week there for that.
Fine. Perfect.
Thanks, Joel. Well, Joel, thank you so much for coming on and sharing as always. Once again, love the presentation. We already got people sharing the quote from our buddy Leonard. Is our buddy Leonard, is he the guy that's in martial arts? He runs another event?
Yeah, it's right. It's Leonard Rosen.
From Pitbull, yeah, exactly. The minute you said that sounds like something Leonard would say. Exactly. I love it.
Truthfully, Leonard probably got it from somebody else. But whatever happened, I learned it from Leonard. Leonard's a wonderful guy. He's a smart guy, and he's a character, But he's fun.
Exactly. Well, hey man, hopefully baseball will get its act together. We can watch some games or go to a few games there for you.
I'll tell you, man. If you come to LA, I got my Dodgers tickets. Now they haven't offered us a refund, by the way. I'm assuming they're just going to roll the money into next year. So,
did the divorce go through? Did the divorce go through the family?
Which divorce is that?
Or isn't the Dodgers owners getting divorced?
Oh, that was years ago. Years. That was like 5 years ago.
Okay, all right, cool. Well, man,
new ownership,
enjoy the rest of your week.
That's all done, man.
That's good stuff then. Well, all right. Well, man, thanks for coming to Note Camp, Joel, as always. We'll talk to you shortly, everybody. And we'll see you soon. All right, Joel?
Good luck, man. Thanks for having me.
Thanks, bud. Thanks for being here. All right, everybody. Hey, that is going to stop that for this session. Our next session kicks off in just about 10 minutes with Bob LaChance from Riva Global. Talk about how to outsource the heavy lifting for your note in real estate, or even he's got some surprises. Bob and I have been working on a couple cool things for Note Camp and helping you maybe outsource some of your capital raising, some of the market goes along with. So trust me, you're going to want to stay tuned for the great stuff that we've got in the next session. So don't go anywhere except to go get a cup of coffee, restroom. You need to grab you a little something to nibble on. You got 10 minutes to do it now. So we'll see you back here in 10 minutes.